Good morning. Thank you for being with us today. Of course, the UAE is hosting the AIIB's annual meeting from Abu Dhabi. And today's session, a seminar with our esteemed panel, is in light of the events of this week. We are discussing how innovative financing can bridge the infrastructure spending gap in the Middle East. It's a critical subject. Everyone understands that for economic prosperity, we need to invest in infrastructure around the world. I think the debate is settled, but are we investing enough? And how should we be investing and financing the critical infrastructure that we need, given that we've just experienced a pandemic? Climate change is very much on the agenda, particularly with COP26 about to start in Glasgow, as well as we're in the midst of the fourth industrial revolution, where AI and technology are showing us what the future might look like. So we're going to try and include all those topics today and discuss some of that. And in particular, it comes down to what is the most efficient, ethical, robust, and innovative way to finance the projects that need to be funded today. I'm Mustafa Al-Rawi. I'm Assistant Editor-in-Chief of The National, based in Abu Dhabi. Let me introduce our panel today, our very esteemed panel. Immediately on my left is Sir Danny Alexander, who's the Vice President of Policy and Strategy at AIIB. We have Tariq Al-Nassar, who's Assistant Director General, Private Sector and Trade Finance Operations at the Opec Fund for International Development. And Niall Hannigan is the Chief Financial Officer at Masdar, the clean energy company. And we have, at the end there, Mark Kutis, the Chief Executive Officer of the Abu Dhabi Global Market Authority. So we're very much in his house today. Welcome all of you, and thank you for being with us. And we hope we're going to have a very enjoyable discussion today. It's going to be about 45 minutes, just over 40. There won't be any Q&A taken, but the conversation should be robust enough that we cover everything together, I hope. So Danny, first, if I could turn to you. Of course, the AIIB is holding its meeting this week here in Abu Dhabi. You had a very busy first day yesterday. The week seems to be going very, very well. Congratulations for that. The AIIB is a relatively young institution, but you've got quite impressive track record up till now. More than 140 projects financed, somewhere in the region of $28 billion. This must tell you that obviously there is demand for infrastructure, but how is the AIIB approaching these projects and the funding and helping Asia and the wider world really build this?
Thank you very much indeed. And first, let me express my deep appreciation on behalf of the AIIB for the government of the United Arab Emirates, for its strong commitment to the AIIB, for hosting this year's annual meeting, and particular appreciation to our close friends at the Abu Dhabi Fund for Development, who have led the preparation and are representing the interests of UAE in our bank. We really appreciate very much the friendship, the cooperation, the support, and we hope that through this annual meeting we could really deepen our partnerships here in the UAE and find more opportunities to work together in the future. Thank you for your kind words about the AIIB, but we are still a young institution, rapidly growing, developing. Our focus is on what we call infrastructure for tomorrow. Thinking about what are the kinds of infrastructure that our members are going to need for the next few decades of their development. And as you said, that means green infrastructure. We target having at least 50% of our financing going to climate-related projects by 2025. It means digitally enabled infrastructure. COVID has shown us how those societies with strong digital infrastructure have been better able to respond and to manage and to keep their populations informed. Bridging those digital divides, especially in Asia, is going to be a critically important challenge for the next few years. Infrastructure which supports connectivity is also hugely in demand to enhance trade, to ensure the smooth flow of goods and services and people around the world. And then, perhaps most importantly in this context, how can we harness our status as a multilateral institution with the commitment of 103 members around the world to help to mobilize more private sector investment for these important tasks? And that's something where AIB will finance private sector projects, but also work in the capital markets. For example, we've worked with Amundi to set up an Asia climate bond portfolio, the purpose of which is to try and mobilize more finance in Asian capital markets for these green objectives. So those are some of the things that we're working on and doing, and we hope very much that in all of those areas, which I think are very much in line with also the commitments that the government here has, that there'll be opportunities for us to build more active partnerships in future.
Thank you, Sudani. Mr. Al-Nassar, if I can turn to you now, it would be interesting to hear from your point of view what the OPEC Fund, how it approaches infrastructure and what its philosophy is as well, and maybe a little bit about the organization, if you don't mind.
Sure. Thank you, Mustafa. For some of you who doesn't know OPEC Fund, I'm sure our colleagues, Adel, Husni, but first I would like to thank Adel and Abu Dhabi Fund for inviting me to this great seminar. So it's a pleasure to be here. For OPEC Fund is an institution started in 1976 with a mandate to promote social economic development of non-member countries. So OPEC Fund member countries are excluded from the programs that we provide. OPEC Fund in the beginning, 76, started to provide programs for sovereign countries, public sectors, and in 1998 we started with our private sector windows, and 2006 with the trade finance windows. Now the objective are in line with other MDBs is to promote SDGs, the 17 SDGs. Definitely infrastructure is a key sector for us, like SMEs, FIs. Yesterday we were the pleasure to sign a loan agreement together with AIB to support a bank in Egypt. We can announce it, it's signed, National Bank of Egypt. It's a key partner for us, a country and the sector. But infrastructure, speaking of the sector, is a key, represent about 30% of our loan portfolio, diversified from ports to airport and also energy, which it is an important sector for us. Now, how do we originate and how develop the deal pipelines? It's like any other institutions. Cooperation is a key. Strategic cooperation with institutions like AIIB and others, multilaterals and bilaterals, is important. It's in line with SDG 17, cooperation for all. And this is where we share knowledge and market intelligence and deal pipelines. And of course, we talk to the clients, sponsors directly that need financing. And we try to package financing, whether on the equity sides or sub-debt or long-term financing to support the client, in addition to soft money like TA for capacity building. Thank you.
Thank you, Mr. Al-Nassar. It's interesting that you overlap many of the MDBs in this field, and it sort of gives a bit of a positive momentum for the future if we're all sort of working towards largely the same goals. Sort of on the private sector side, Mr. Hannigan, Masdar is very much at the forefront of many of these projects around the world, clean energy, renewables. How do you ensure strategically that your financing goals are aligned with sort of the bigger picture?
Thanks, Mustafa. Like my fellow panelists, I'm delighted to be here today. Might find very simple, but I think first and foremost is having a clearly defined strategy for us is critical. Understanding what geographies we're going into, what technologies we want to invest in, and at what stage of a project we're focusing on. And while that sounds simple, it's very important, and my colleagues here who are representing the development banks will appreciate this. We're very active in development, in developing countries. And if we want to move into those developing marketplaces, collaboration is absolutely critical. Collaboration amongst ourselves, amongst governments and regulators, and amongst the financial institutions. So that's why the strategy is so important. Knowing that you're moving into these marketplaces allows you to start the conversations very early with all of the other parties to ensure that you can put in place a sustainable long-term framework that allows the renewable sector to actually move forward. I think the other thing I would say is for us as a developer, there's a lot of capital moving into our space. The amount of capital moving into the renewable energy, sustainable space is enormous. And our responsibility is also to ensure that we create optionality to enable ourselves to tap into that capital as it moves into the ESG space. So what we've done, for example, within Masdar with the support of ADGM is we've established the region's first green real estate trust. That's initially been seeded with 4 assets. It's worth about 1 billion dirhams, but that trust, real estate trust, will now acquire more assets and will become a vehicle to allow us to tap into future pools of capital looking to invest in sustainable real estate. We've recently obtained our inaugural credit rating, investment grade credit rating from Moody's and Fitch. And that again will allow us to start to tap into the broader pools of debt capital that is there. So I think for us it's about having a clear strategy, so knowing where we want to invest in collaboration with the right organisations and institutions to ensure that funding is available there. And secondly, making sure we're putting in place all of the building blocks to allow us to tap into the broader pools of capital that will be available and will be necessary to finance the growth.
It's interesting when access to capital is no longer an issue, then it becomes how you use that capital, the cost of capital, efficiency, and ensuring that there is return on that capital that you use.
Correct, but I'd say there is an enormous amount of capital that is coming into this space. It is not necessarily always going to the markets and places that need it the most, and that in particular is the developing countries, and that's why having an early stage, early collaboration with the regulators, with the governments, and with the development banks and financial institutions to ensure you put in place a framework that works for everybody. Ultimately, the aim for us as a developer in those countries, and I think everybody's aim, is to deliver cost-competitive, clean energy to those countries. And you will only do that if you collaborate. But getting the capital into developing countries is still the biggest challenge that there is.
A neat segue for me to Mark at the end, Mark Kutis from the ADGM, because we mentioned regulators there. You, based here in Abu Dhabi, you're leveraging everything that has made Abu Dhabi a successful hub. How do you build on that, not just to attract businesses, corporations, investment, but also to spur financing through an innovative regulatory framework?
So, the issue is to create a center of excellence where financiers, investors, producers, arrangers, everyone comes here. And that's predicated on 2 factors. Factor number 1 is common law. You need to have a jurisdiction, you need to have the rule of law that people understand that they can adjudicate something and that the outcome will be understandable. It's not going to be kind of random. And the second is you need to have regulation that is market sensitive, understands the needs of business, but is also sensitive to the possibility of monopolistic tendencies. So that's a complex, sophisticated, and enlightened regulatory framework, which I think, not to put a plug for ADGM, but I think that's the bedrock of this institution, and that's why it's here. So in terms of the challenges that Neil was referring to, it's, you're trying to achieve a lot. You were mentioning earlier that 50%, I think, of the new financing for the AIB will have to go into green projects. Those are new activities. People haven't quite figured out how to do that. All this will have to be kind of placed in a digital format. That's all new. Most of the contractors, let me not exaggerate, many contractors today don't have those native skills. So people will have to work with different groups. And I think these environments, which are collaborative, and I'm using Abu Dhabi as an example, where you can pull people together, are more attuned to creating the opportunity set to do these things, which is to bring different skill sets together to achieve these things. This cannot be done by the public sector. Let's be very clear. The public sector does not have that kind of expertise. You must use the private sector, and you must do a combination of things to bring people together, so you have public-private partnerships, and you will have to incentivize the private sector. You know, Neil was talking about the flood of money. Don't forget, interest rates will adjust. You know, they've been much higher years ago. Most people weren't around for it. I saw it, and people should be ready for higher interest rates. But putting that aside, you need to have private capital, and you need to incentivize it. There are all kinds of interesting structures where you can do senior, junior tranches, you can do subordinated. There's different ways that you bring everyone in. And so that's important, it's been done, but it's going to become more complex now because you're trying to digitize everything, right? Which is essentially to be able to read the data, and you need to be sensitive to green transactions. So there's a lot going on here, and the one caveat is that we, you know, and I'm hoping that the AIB is sensitive to this, there's a tendency for large players to create monopolies. And that's something that you have to guard against, because if we know one thing from history, is monopolistic behavior ultimately is very bad for everyone except for the monopolists.
So Danny, is there anything you want to add to what Mark was saying?
There is no prospect of AIB creating a monopoly. That's definitely not part of our intention. In fact, you know, one of the interesting things is that we're part of a kind of community of multilateral development banks. You know, we work closely with OFID, as you were saying, but with the World Bank, with the Asian Development Bank, with the European Bank for Reconstruction and Development, the Islamic Development Bank. You know, all of whom have slightly different mandates and purposes, but the same basic approach to governance, to standards, to the impact we want to make on the world, and where we have this common challenge right now. So, if I may, after this, I'm heading to the UK to go to the COP26 meetings, where all the countries of the world are coming together to work out what are the next steps on climate change. UAE made some very important announcements about its own agenda in this space last week with its 2050 pledge on net zero. The scale of the finance that needs to be mobilized to achieve those goals is almost unimaginable. And yet it has to be done, or we're all going to suffer enormous consequences if we fail to get a grip on climate change. So when you're talking about needing to mobilize trillions of dollars per year, it's a rapid scaling up, you know, doubling, tripling of finance going into this space over the course of a decade. So the task before all of us is to say, how can we use our position, our space, to help to create an environment where the projects are there, the environment is there, that investors who haven't so far considered being in this space can get into it.
Yes.
And so for MDBs, our amount of money in that context is relatively small, albeit our $100 billion of capital sounds like a lot in that context. So we have to think about how do we use those resources to find the most exemplary projects that can help, you know, where we can support innovation, where we can help in markets where otherwise the risks are too great for other financiers to go in. And so I think that one of the important things that I hope will come out of the COP26 meetings is much more sense of how the private sector is going to be mobilized in order to get the scale needed to solve this global challenge. And of course, it's one, perhaps the most important, but it's one of many global challenges and development challenges that we have to solve.
If anyone wants to jump in there before I ask a question, please.
No, I think, yeah, I agree. I think you need three players to reach the targets. I mean, if we look at Paris Agreement objectives back 2016, I know a lot of things happened since then, but the objective is that from 16 to 2050, we need to mobilize around $27 trillion to reach the targets for renewable energy and to move into energy transition. And where the fund is going to come from, definitely from private sector is the main player, but the private sector need support from the government. So you need three players: government, DFIs, and the private sector. Now the governments, they should focus on, I believe, or countries focus on urgent matters, and where the private sector can mobilize funding. And we, as a DFIs, we have shown a lot of commitment to the energy transitions and emerging market or frontier markets. This is the country we work with and we support. And also we manage to diversify the energy mix. A lot of countries, they moved from relying on HFO to produce project, if we speak about energy, power generation, into green, into renewable energy. Countries like Jordan, since we are focusing on Middle East. And we are happy as a DFI, as a private sector and Opec Fund, with other institutions, IFC of course, to be part of this journey, because they introduced the Renewable Act, I believe, in 2009, 2010, and now they are closer to 20% of their electricity generation is coming from renewable. I remember the first transaction, or the second, or the third was with Masdar, the Tafila project, the wind farm. It is really a milestone. And this is the role of the DFI, where they mobilize and they create a market, and then they let others to come in, especially commercial bank, to support. So the role of the DFI is a pioneer. Now, what do you need from the government? Definitely you need a safe environment, because nobody's going to support if you don't have a safe environment. Now, what does that mean? If I look at the root problems of the energy sector worldwide, because we have a global mandate and we work with project Latin America, Asia, and Middle East and Africa. And the common interest or the common denominator that you need really issues on that local currency PPA, which is the power purchase agreement that need to be in local currency instead of US dollar to mitigate all the foreign currency mitigation. Imagine your income in local currency and your obligation in US dollar. Second, you have energy storage. What are you going to do with all this energy that you produce as IPP, like Masdar and others? So you need a good investment. Also, you have a high level of transmission loss. In addition to that, you have investment in the grid, which is you have unstable grid, what's going on. So this is the responsibility of the government, and private sector, of course, will not penetrate and invest further until you have the right platform. Thank you.
Thank you. Mr. Hannigan, it's interesting what Mr. El Nasser is raising with regards to a balance. And when it comes to a balance between the public sector and the private sector, it seems as if Masdar is finding a good balance when it comes to that for its projects. Can you talk a little bit about that experience?
Yeah, as I mentioned earlier, I mean, I think particularly, and Tarek mentioned the experience in Jordan. Within these developing markets, it has been very much a case of a collaborative discussion. So, you have this challenge. You have a developing market. It has a risk profile that your typical investor would originally not be that comfortable with. But you have an ultimate objective, and that ultimate objective is to deliver a renewables program that delivers cost-competitive energy. In order to get there, you really have to have what I just consider the most important conversation, which is a risk allocation conversation, where you sit alongside the government, the financial institutions and the developers, and you look at the underlying risks, and you ensure that risk is appropriately and sensibly allocated. And you allocate it on the basis of who is in the best position to manage and mitigate that risk at that point in time. But you don't just stop there. That conversation is a conversation that continues over the next 5, 10, 15 years. Because guess what? The risk profile evolves. And over time, what governments and people find is that risks that developers weren't willing to take, they're able to take at a later stage. Risks that financial institutions weren't able to take, they're able to take at a later stage. New financial institutions are coming into that program because the risk profile has changed. But that initial conversation has got to be very much about how you allocate the risk in a very, very sensible way. It's not, so Danny and I were having a conversation before, it's not an easy conversation, but I think you started with the common goal, and that common goal is to deliver cost competitive, in our case, renewable energy into that country. And if you have that common goal, then I think you do get there. Challenging, but it's all about appropriate and sensible risk allocation.
Mr. Koutis, has conversations with private sector investors their risk appetite, their outlook changed after COVID? Do you find that compared to a year and a half ago, you have to come up with a different rationale? For example, when you're talking about Abu Dhabi, or you're talking about basing your interests here to then go and invest?
So post-COVID, I think across the board, you've seen an acceleration of the trends that we were witnessing before. So initially, you had the shock of COVID and what it meant, lockdown, people afraid of the unknown. Then as we came out of it, the first impulse was, okay, how do we get back in? And then people have realized that the world has sped up. And it was actually moving very fast before, if we really care to pay attention. It's moving even faster. So I think there's a dawning recognition that you have to change the way you do things in one way, shape, or form. Most of us would like for the other person to change because we think we're impervious to the forces of the universe. But there are tremendous changes afoot. And again, just to go back to the earlier comments about that 50% of the projects for AIB are going to have to bring in some kind of have green aspect, that you have digital, digitization, that you have to use new methodologies from the capital markets. All it means is that people are realizing that they have to do things differently. And I think the key message here is that collaboration with multiple parties becomes more and more important. Because the concept of the state bringing in 10,000 workers to build a highway, that's from before. That doesn't work anymore. The state is no longer able to provide kind of a nuanced and sophisticated execution of a project. So you need to marshal different groups. So yes, things have changed, and I think people realize that they have to adopt a new approach, and everyone, including everyone, is struggling to figure out. I mean, if you think about how we communicate, 2 years ago, if you said to people that you're going to be having a lot of hybrid meetings, they would laugh at you, especially in the Middle East, right, where it's more common to speak to people face to face. But they adapted rather quickly to the use of Zoom and Teams. So we're all being forced to change because of what's happening around us. And it's the imperatives of this new reality that are driving the change.
Yeah, I think some very large projects were agreed and signed through Zoom negotiations, which was probably unthinkable a year before. But to pick up on what you were saying about things changing, I mean, I remember a couple of years ago when the news was all about Greta Thunberg and activists and telling us how our generation, and forgive me for putting us all together in that, our generation had got it so wrong, we'd stolen their childhood, to now where we all agree that climate is the most urgent issue, and we see the financing tools that have come along, like the bonds that are linked to green projects, or the ESG linked bonds. I mean, it's a whirlwind. Mr. Danny, maybe you can talk a little bit about suddenly these tools have become mainstream when they were maybe a few years ago very, very niche.
I think that's absolutely right. I mean, look, you see it all around you in this room. The theme of our annual meeting is investing today, transforming tomorrow. And that means that we have to change the way we do a lot of the things that we've got used to over many, many years. And you're right. Whether it's in the capital markets, as you described, where AIB has been supporting ESG, developing ESG standards for Asian markets, climate bonds, where the Amundi portfolio I mentioned earlier is aimed to start assessing climate activity on the issuer level, not just about the use of the bonds, which is a step forward and something which hopefully will enable more investors to feel comfortable that what they're investing in when they're told it's green is really a green institution, not just a green activity that's being financed by the bonds. But it's changing so rapidly. And I think the other aspect, which was mentioned here, is about the use of technology. So for AIB, we have a focus on digital infrastructure. You know, I suspect in 20 years' time, we won't have a category of digital infrastructure because everything will be digital. But right now, it's about how do we bridge the divides where some societies don't have access to even the basic telecommunications, let alone the more sophisticated things that we've got used to when we're, you know, scanning our apps and looking at Al Hosn every day when we go to our meetings. Many societies don't have that. Technology can also optimize existing infrastructure, your roads, your railways, your buildings, your energy generation. You know, if we talk about energy efficiency, application of technology is going to be absolutely critical. And so increasingly, for MDBs, you know, and for all investors, we can't just be comfortable with what we've been doing year after year after year. We have to be willing to take more risks and to look at areas that are moving very, very quickly in order to help share the benefits of those new ways of doing things much more quickly, particularly with those countries, you know, low and middle income countries that otherwise might have to wait a long time for those things to come along. We can't wait. And so part of our role is to make sure that when we work with a company in Abu Dhabi investing in a project in another country, that then we can take those lessons and apply them in other places and do so very quickly. And I think that kind of learning is also a key challenge for institutions like ours, but also a key way in which we can add value.
If I can add to that technology point, because I think it's absolutely critical. You know, I've sat here and said the flow of capital towards renewables is, there's no shortage of finance and it's easy to finance a renewable energy project. But that's really looking at your traditional projects like wind, solar, waste to energy and the like. The reality is that the energy transition cannot happen with solely wind, solar, waste to energy. New technologies, the advancement and then the commercialization at scale of new technologies, whether it's hydrogen, whether it's battery storage, whether it's carbon capture, utilization, storage, is absolutely critical to the overall energy transition. And ensuring that financing, to your point, Sir Danny, ensuring that financial institutions and investors are comfortable taking earlier stage risk on those new technologies, and ensuring that capital is being deployed towards not just the established bankable technologies, but towards these new technologies is absolutely critical. And it has to happen much, much quicker than it did with conventional renewables. I call it conventional renewables now. You know, when we're 15 years in this business. When we did the first ever renewables financing here in the UAE, Shams, you know, technology was questionable in people's mind, the commerciality was questionable in people's mind, the risk profile was unknown, very few banks interested, and cost of financing very high. 15 years on, it's taken 15 years to get, for example, really one of the most recent things is probably over the last 18 months, regional and local banks are now starting to jump on board. For the last 12 to 14 years, it's been still the home of DFIs and international financial institutions. It cannot take another 15 years for other institutions to start to want to finance new technologies. Has to happen much, much quicker.
I mean, Mr. Al-Nasser, is speed a good thing? If we pick everything up, the pace of all these investments and projects?
Yeah, well, sense of urgency, I believe. I don't know about speed, but sense of urgency. I mean, if I look at, again, Opec Fund, since our member countries are oil exporting countries, however, our loan portfolio, 50% is focused on renewable. Now, this is not just a choice. This is the market demand. You know, they dictate where the DFI is going. So we respond. We are service providers, right? We are lender institution. So we are addressing the need of the clients, basically. So it's a lot of focus on renewables, and a lot of countries are managing to diversify the energy mix. And this is our role, is to help them, to move them into this area. Now, what do they need? They need flexibility. They need more longer tenor financing. I remember the first transaction, we did it for 18 years, long-term private sector. And even within the staff, within the credit committee, within even the board, they were surprised for private sector to do 18 years and 5-year grace period. And now we're doing even 20 years long tenor. That means it's good for the client, because end of the day, you need to have an affordable tariff. Because the end user, you and I and corporates, they need to have affordable tariff. And you don't want to put so much burden on the off-takers. Yes, you might have so many IPPs there to produce energies. And then what are you going to do with this energy if the off-taker, as you know, most of the off-takers are loss-making entities. They are owned by the government, so they rely on support from the government. And so the guarantees is already added to the GDP, and this is debt to the GDP. Most of these countries are on the high side, external debt. So I think that the privatization is a key, of course, especially for the off-takers. You need to manage and help them, and this is what I think DFI is doing, AIB and the big institutions like IFC and others. They provide advisory services. I remember one transaction we did, a hydro project in Cameroon. It's almost $1 billion total project cost, 18 years, and the margin is 4%. Now, I don't see any commercial bank will be able to take the risk of Cameroon, which is mostly, I think, around CCC rated, for 18 years, 4%, and Euribor is negative. But this is the role of DFIs with a 5-year grace period. So you're talking about difficult countries, difficult sector, hydro, but this is what the DFI did, like EIB, EBRD, and others. So, of course, we will continue to support countries. This is who we are. We can provide guarantees. We can provide equities. I'm not talking about the private Opec Fund in general, C shares, advisory services, and also soft money. I think our task is to move them and to diversify the energy mix as much as they can, and not to rely on HFO. I think this is a priority. But for the OPEC fund, we don't have any conditions. So we don't come with the conditions and we force it on the government or the country. You have to have this, otherwise we will not finance you. We let the country dictate, and we come along. Of course, we'll provide our experience when it comes to governance. Because end of the day, as I mentioned, we are lender institutions. Yes, we have a global, our mandate is noble, especially we support non-member countries, but we have a risk management committee. We have a strong ALCO. We have a strong credit committee. And we have all these limits, single obligor and so on. And don't forget now, yes, I agree with my colleagues, but liquidity is so much in the market. It's really difficult to find a bankable project. I think us as a DFI, end of the day, you need to find a very good bankable project where you have a good repayment risk and you have very good construction risk. I think what we learned from COVID, crisis equal opportunities, a lot of, sorry to talk about the power generations, a lot of power generation, they declared force majeure because the country declared force majeure. They are unable to honor their obligation of time because of travel ban and the lockdown. So they are, and plus slow demand from the clients. So they were unable to generate and pay on time. So this is what we're dealing with. And I think even in 2006, we had issue in Pakistan, which is the circular debt issue. I'm sure Danny is aware of that, where everybody owe money to others. Yeah. So the off-takers, they owe money to the IPP owe money to the lenders. And of course, the users, they don't pay money to the off-takers. So I think this is what we all need to work together, the three parties, government, DFIs, and private sector, to address the issue.
I mean, largely it's poetic that your fund from an organization like OPEC is supporting the energy transition to a more diversified industry. But I'd be interested to know, Mr. Koutis, because one of the ambitions for Abu Dhabi, for ADGM, is to become a leading commodities market. And we're talking about the energy transition, we're talking about infrastructure, we want to finance these projects. Is that a natural conclusion, do you think, that with everything happening, that Abu Dhabi will still be a future commodities hub?
So you need to step back and ask yourself the question, what are the preconditions for creating a hub, period? So what is the environment? What is the logistic infrastructure? And the issue here is that if you're setting up an exchange, you want to have communication. You want to have capital can move in and out, right? You want to have the rule of law. And you want to have an ecosystem where people are comfortable to come and live here, or not. In other words, travel here or fly back in and out. So Abu Dhabi and the UAE has those preconditions. So the issue of becoming a commodities hub is a function that this energy transition will require an enormous amount of minerals, right? And we heard about from Greta Thunberg about cobalt and all those things, right, that people are becoming more familiar with. So that to me is entirely logical to create this, you have an ecosystem. It could be for this, it could be for tokenization, it could be for crypto, it could be for a whole range of things. It's a platform to bring people together. Now we found out that you don't necessarily have to be physically located here. You don't necessarily have to have a open outcry system, right? But you need that platform. It needs to be somewhere that people can, move in and out. The energy transition will require an enormous amount of different minerals. And I think this is what people sort of forgot when they said we're going to move to this new world and it's going to be beautiful. Well, it will be. And eventually we will be in a world of abundance. This is the Peter Diamandis thesis, right? We will be in a world where energy will cost zero. But we're a ways from that. In the process, you're going to have enormous variability of outcomes. And you've seen what's happened to the price of crude. It's moved around. Now, it's interesting that the price of crude has moved up a lot. In a way, that actually helps and facilitates the transition, because the people who are investing in renewable projects, they say, wow, I don't want to be exposed to this sort of variability. If, the lower the price of oil, the easier it is to drag out the transition, right? Because you have it. The higher the price of oil, conversely, creates this precondition for people to say, whoa, let me kind of accelerate and move out. Either way, you're going to need a whole range of minerals. And until we get to this nirvana type environment where we're at a different level of civilization, which we're a ways from now.
Thank you. We've got a couple of minutes left, and I just want to address one topic that might seem nuanced, but I think it's important, is large-scale versus smaller-scale projects. So the idea might be you want billions, you want one project with billions that really has an impact, and you finance that, but or is it a strategy of a mix of the two, or would you rather have lots of smaller projects, Danny?
For AIB, we finance a wide range of sizes, but I guess they tend to be larger in the way that you're talking about. But one way to solve that is to act through intermediaries. So the agreement we signed yesterday was with the National Bank of Egypt. And that's an on-lending facility where we together put capital into that bank that it can then on-lend to smaller projects, right, with a particular purpose and meeting the AIB standards. And so in that way you can, different kinds of institutions can work together according to their own expertise and specific knowledge. So I think to solve this global problem, you need small projects, you need larger projects, you need huge themes to develop in the investment markets, but you need all the different levels. And so we each have to play our role according to what we can do.
Mr. Hannigan, is there a perfect scale of project?
No. No, I completely agree with Sir Danny that you to solve this problem, you can't just say, I'm going to build large-scale utility projects and that's all I'm going to have. You will need distributed solutions. You will need off-grid solutions to help solve this issue. We've been active, as I said, we're 15 years. We have a core business that focuses on utility scale renewable energy, but we've also had a business that has focused on delivering energy services, off-grid solutions, in partnership with the Crown Prince Court and Abu Dhabi Fund for Development. So we've delivered solar home systems throughout Afghanistan, Egypt, Morocco, and renewable solutions across the Pacific Islands and the Caribbean. Places like that need those solutions. Financing them today, yes, on an individual basis, it's a challenge, but I think that's where you start to become a little bit more innovative and a little bit more creative, and you create these energy services businesses, you pool the projects, you pool the assets, and to Sir Danny's point, you then raise financing at a more corporate, higher level that allows you to develop more of those projects around. But you won't be able to do this, you know, by just purely focusing on large-scale utility projects.
I'm afraid we're out of time. So the last word is with Mr. Hannigan, but thank you to all our panel. Thank you to all of you for being here today. And we are truly in a very exciting and historic period. So good luck to everyone. Thank you so much.